Hey, I combined the ICHIMOKU indicator and the parabolic SAR and traded them 100 times. Watch the full video to see how much I made. Welcome back to the Data Trader, and if you're new here, hi. This channel is all about backtesting indicators to reveal its true win rate, so that we know if it's worth risking money into it. And in this episode, I backtested one of the most popular indicator combinations in trading, which is the ICHIMOKU Cloud plus Parabolic SAR. Let's start with the Parabolic SAR. The Parabolic SAR is one of the most simplest and easy to learn trend indicators to implement in trading. It is used to predict change of direction and reversals of an asset price. So if you open the Parabolic SAR on TradingView or any charting software, this is what it looks like. A bunch of dots that is positioned either above or below the candlestick. So how you read this indicator is very simple. If the dots are below the candlestick, it is considered a bullish momentum. And if it is above the candlestick, it is considered a bearish momentum. Like I said, very simple. A popular way of using the Parabolic SAR indicator is to enter a long position when the dot switches to below the candlestick. And when it switches to above the candlestick, you open a short position. Well, that is not a very good way of using the Parabolic SAR, because using the strategy this way would result in a very low win rate. It can lead to many false signals when the price moves sideways. But solely trading only using the Parabolic SAR indicator is also a bad idea. Let's say you enter a short position here because you thought the market is on a downtrend. But if you zoom out and look at the bigger picture, you can see that the market is actually on an uptrend. So if you took a short position here, that means you are actually going against a trend, which is not a good idea. That is why it is better to combine the Parabolic SAR with another indicator, such as the ICHIMOKU Cloud. The ICHIMOKU Cloud or the ICHIMOKU Kinko Hyo indicator is a very versatile indicator that can help define support and resistance, trend directions, and momentum. In first glance, it may seem messy and very hard to read, but let's break down the parts. It consists of multiple parts. We have the Tenkan-sen, which is also known as the conversion line, the Kijun-sen, or also known as the baseline, and the Chiku span, or also known as the lagging span, and two leading spans that form a cloud. So how the hell do you use this mess? Well, it's actually a lot simpler than you think. So first things first, there are a couple of rules to follow when trading the ICHIMOKU indicator. To make it easier, I'm going to disable all parts except these two leading spans, which makes the Kumo cloud. So what you need to remember is this: if the candlesticks are above, you are only looking to go long. When it's above the clouds, you only take long positions. Similarly, when it's below the cloud, it means that the price is on a downtrend and you are only looking for short positions. Another rule is that if the candlesticks are between or inside the cloud, do not trade it. Simple. So what about the other parts of the indicator? So I'm going to remove the lagging span because you can still use the ICHIMOKU without the lagging span. It's just a preference, but for the sake of simplicity, I'm going to remove it. So now we are left with the cloud, the conversion line, and the baseline. To make it simple to understand, these two lines behave like a moving average. The conversion line acts as a faster moving average and the baseline acts as a slower moving average. So the way we use this is by waiting for the lines to cross over. So when the conversion line crosses over the baseline upwards, while still being above the cloud, you take a long position. Remember, when it's above the cloud, you take long positions only. Do not trade when the candle is inside the cloud. Similarly, when the conversion line crosses the baseline downwards while still being below the cloud, you take a short position. But even with the simplicity of the indicator, even I get confused sometimes when backtesting because it's so messy. So I recommend using this indicator on TradingView by Skyrock Signals. It helps us determine when to take long and short positions by giving signs like this. Trading using the ICHIMOKU indicator isn't really effective because the conditions to meet the buy and sell signals very rarely appear, so you take less trades. And when it does appear, it is not even a good entry signal. Most of the trends already happened before. So instead, I am actually going to remove the baseline and the conversion lines and replace it with a parabolic SAR. So now, we only have the Kumo cloud and the parabolic SAR. Utilizing the combination of the parabolic SAR and the ICHIMOKU cloud is very simple. So again, we follow the rules of the Kumo cloud, which is if the candles are above the cloud, only take long positions, and if the candles are below the cloud, only take short positions. And don't take positions if the candle is inside the cloud. So for our entry signal, when the candle is above the clouds and the parabolic SAR is below a candle, you take a long position. So you would enter a position here. Remember, the parabolic SAR is a lagging indicator, so you always buy from a candle's close. It's the same thing with the short position. If the candle is below the cloud without touching it and the parabolic SAR is above the candle, you take a short position. Now for our exit signal. There are three criteria for us to meet when exiting a trade. The first criteria is when the candlestick hits the cloud. When the candlestick hits the cloud like this, we close our position immediately. But if it gets out of the cloud again and our entry signals are met, I enter a position again. Next is if the candlestick hits the parabolic SAR. At the beginning, I said that we are using the parabolic SAR as a trailing stop loss. So this is exactly that. So if the candle touches the parabolic SAR, we close our trade. The third criteria is if the parabolic SAR changes position. So if the parabolic SAR changes position like this, I also close my trade. These three criteria can happen without order. So if any of these three came out first, I close my trade. I'm going to be using this Excel sheet to collect the data for this backtest. My starting capital would be $10,000 and I'm using 200 times leverage per trade. But I'm only risking 1% of my capital per trade so that I would not blow up my account. For this backtest, I am using the EUR/USD 15-minute chart. Here's a time lapse of me backtesting the strategy. You can skip to the timestamps shown in front of the screen to see the results. So after testing the ICHIMOKU plus parabolic SAR strategy 100 times, here are the results. We made a total of $185.18, or about 94 pips using this strategy. But despite profiting, we managed to receive only a 35% win rate. Our biggest single trade win was $163, or about 82 pips. Which is almost as much as our total profit, so we kinda got lucky there. Our biggest single trade loss was $62.36, which was 31 pips. So from the results that we got, I think that the Ichimoku plus Parabolic SAR combination is not really a good strategy. Because like I said, most of our profits actually came from one big trade, so we kinda got lucky there. I think one of the reasons to this low win rate is because the Parabolic SAR often displays a very late exit signal. There are multiple times where a trade is supposed to be profitable but turned out to be a loss because the Parabolic SAR displayed a late exit signal, and the clouds aren't really helping either. It just adds unnecessary steps and sometimes wasted trade potential. You can easily replace the cloud with a long period EMA. But what I noticed from this backtest is that the Parabolic SAR has a really good potential of becoming an entry signal. Most of the trends actually got detected early by the Parabolic SAR, but because of the late exit, most trades turned out to be a loss. So, to summarize, I think the Parabolic SAR thrives on a trending market. The only problem is that if the price moves sideways. So if we paired up the Parabolic SAR indicator with another indicator that filters out false trends, it may be a decent strategy. And remember, trading is a probability game, so if you found an indicator or multiple indicators with a high win rate, it will give you an edge in trading. That's all from me today. Subscribe if this video gave you value. Thank you for watching, and I'll see you in the next video.